Hello everyone to a repeat of a video. You can say a repeat of a video called named as System Part 2. If you have regularly watched my videos over a span of 1 month, you will be seeing that there is a video called System Part 2, titled System Part 2, in which I have explained my strategy, not my strategy, but how to make a strategy, how to make a system, because we need a system to trade on, like a bullish candlestick pattern and all the things. So in this video, this video will be focused on all the aspects of the system that will be covered in this video. Risk management, we will be covering risk management, and one thing, that is psychology. In psychology, this will be a little bit advanced, not little bit basic, it will be a little bit advanced, but it will definitely go into your head. So let's just start this video by simply starting from the recap of the previous video. Just it will be 1 2 minutes. So what I told in the previous video was that a strategy is made by 1 2 3 things. Okay, 1 2 3 things, which are, you can say, which are your setup, your foundation, which is your foundation. Basic means that, let's say your trading strategy is based on, let's say your trading strategy is based on support and resistance. Support and resistance will be your fundamental basic. So if you have recorded that video, now get started to the system part 2. So let's say you have a strategy, because in system part 1 I told how to make a strategy. So let's say you have a strategy, means system. Okay, means system. Okay, you have a system, let's say. Okay, now in strategy or system, what would be the things? Definitely, when you are analyzing the charts, you will be getting two things. Okay, when you are analyzing the charts, you will be getting two things. The two things are, you will get, let's say you are bullish, so you will get reasons that suppose your bullish bias, as I told about bias in the previous video. If you didn't have watched that video, go check it out on my channel. Okay, that is a very informative video covering the three dimension of the trading and three important aspects of trading that will make your trades better and improve your trades. So the thing that I was talking about was let me type it. Okay, system. Okay, you will be, let's say you are bullish, I was talking about, let's say you are bullish, so you will get reasons that supports your bias, means your bias is bullish. Let's suppose you will get reason that supports your bias, or you will get reasons that sometimes not support your bias. Okay, okay, just let me write it down so it will be a lot easier to explain you, and you can also take a screenshot of this whole like of kind of text formation that I am making for you. Okay, so there are two things that support your bias or not support your. So let's say you have a strategy which is based on Fibonacci. So you have a Fibonacci buy, one reason that it is on a support of 50%, and you are thinking to buy. So you have one reason that is of Fibonacci support. Okay, one reason of Fib support that supports your bias. Okay, Fib buy. Okay, and number second reason, let's say there is a institutional level. Okay, institutional level is a point of origin of big moves. Okay, institutional level. So you have two reasons, and the one thing that doesn't support your bias is the reason of trend. Let's say a trend is against you. So if the trend is against you, what you will do, you will put half quantity, because trend is a major reason. Trend will dominate these two options here. So you need what to do. You can be right. Okay, there are more chances you can be right because you have two reasons. So you will put half quantity, means 50% of your quantity. So this is the risk management in your bias trading. So what you need to do, if you have more than three reasons that supports your bias, you need to put 100% quantity. And if you have like a big reason not supporting your bias, you have to put half thing, so half the quantity, or half the risk. So that's the thing. Okay, so there are three types of traders in risk management, because I told you I will be explaining risk management in context of system. So you have risk management. Okay, risk management. So in risk management, you have three types of trader: aggressive trader, and you have intermediate, which trades both the ways, and you have one more, that is conservative trader. So conservative trader is a type of trader which puts less trade but high probability trade. So he need to put big risk, because he is taking specific trades, not trading. He's taking like one trade a day, like this. So he need to put like 2% of risk. Okay, and for intermediate, he can flexible. He will be flexible. He for aggressive are the traders who put like 4 5 trades in a day. They are scalpers like this. So they need to put risk like 0.5% risk, 0.5% risk. So intermediate can choose both of them, because they are sometimes aggressive and sometimes conservative. So I will prefer you to be a conservative trader, which trades less but trade more. So you have big ratios in conservative trader. So this is about the risk management. Identify what your setup is. Identify your setup is aggressive, intermediate, or conservative, and then according to that, specify your risk management, specify your trades. Okay, so there are three types of traders in risk management, because I told you I will be explaining risk management in context of system. So you have risk management. Okay, risk management. So in risk management, you have three types of trader: aggressive trader, and you have intermediate, which like, share and to subscribe the channel. Thanks for watching.